life sector has been assigned a stable rating by AM Best. I'm Yvette Essen for AM Best TV, and I'm joined by Tony Silverman, Associate Director for AM Best. Tony, can you summarise some of the factors leading to our stable outlook for the sector?
Well, one of the major factors is actually a good growth outlook for defined contribution pensions and annuities. But and we do think that there are strong economic drivers for that growth. But that is offset by what has become a narrow product range, regulatory uncertainty, and a likely increase in investment risk that we see going forward.
There talked about narrow product range. How has the UK life insurance market been evolving with regards to products?
Well, it's become focused on the two products, defined contribution pensions and annuities, which have growth, and so it's always good to be focused on growth products. But part of the reason that has evolved is the retreat from non-pension savings, particularly the with profits product and also investment bonds. So what you're left with is a business which primarily communicates with the public through their employers, and a product, defined contribution pensions, which is sold primarily on a business-to-business basis to the public's employers, alongside the other product which I mentioned, annuities, which is mostly the transfer of defined benefit obligations, again from employers to insurers. So the insurer's retail presence has diminished. The communication is primarily through the public's employers. And that has implications for the sort of business that these companies will become over the longer term, in our view, and also for their brands, for the value of their brands. A diminished retail presence probably is not good for brand value over the longer term.
So is that a good idea then? Is that a good business model to focus on these products?
Well, as I mentioned, it's always good to be in growth products, but there are fragilities to the business model which arise from that, and it is and the diminished retail presence. So it's fair enough. It's a model that has some big advantages, and the companies have to run with those growth products. But meanwhile, they are investing in the digital sphere to try and preserve a retail presence, if you could call it that, but certainly a more day-to-day contact with the public. But what you can actually sell over the digital sphere is still a matter of investigation, really. In this segment, the companies are certainly providing services, particularly to do with defined contribution pensions. But that's a service for a product which is sold to the employers, initially in a business-to-business environment.
Finally, can we talk about asset allocation? The report touches on about how there's been a bit of a movement now towards illiquid assets. So what do you mean by illiquid assets, and is this a good thing?
Well, illiquid assets are assets where there isn't a day-to-day price quoted as you would find in equity and bond markets. And there isn't a day-to-day market either. So the obvious examples are commercial property, infrastructure projects, and lending directly to commercial counterparties or individuals. And what the insurers are after here is a better return. They're looking to be rewarded for passing up liquidity for long periods of time. And they also would expect to get some return from disintermediating traditional counterparties, whether that be by lending directly instead of funding banks, or through owning construction projects instead of funding developers. And the risks associated with this are to some degree new. Certainly the risks associated with a significant step up in ownership of illiquid assets. And we do not believe that they're really very well matched to the regulatory regime that in terms of capital that companies now operate under in the form of Solvency II. So we engage with insurers using perhaps a slightly different vocabulary and concepts to what you would find in Solvency II. Investing in illiquid assets does involve a commitment of capital, but it might be a very good use of capital to invest in illiquid assets, and we do believe there are some good economic reasons for the companies to do so.
A copy of AM Best report on the UK life sector can be found on ambest.com. For AM Best TV, I'm Yvette Essen.